Yeah, silver is definitely the fuse. Silver is a teeny tiny market compared to almost any commodities market, and it's certainly a minuscule market versus gold.
Yeah, absolutely. And I'm going to ask you, you've made some really, really interesting calls on silver in the past, and really, I know that you've talked about silver as the fuse to break the financial system. Could you please explain that? Because nobody else I know has ever used that expression, but it really rang true with me what you said.
Yeah, silver is definitely the fuse. Silver is a teeny tiny market compared to almost any commodities market, and it's certainly a minuscule market versus gold. If you look at the suppression that has taken place, and I'm going to say it really started in 1996 with Robert Rubin's strong dollar policy, basically dollar good, gold bad. The reason gold has had to be painted in a poor light is because it is a direct competitor to any fiat currency. Fiats are unbacked, gold is real, gold is money on its own. So it's a competitor to fiats. It's obviously the number one competitor to the reserve currency of the world, the dollar. So what they've had to do is suppress gold in order to prop up the dollar, and propping up the dollar, what that has done over the years is it has allowed and aided the U.S. Treasury to borrow. And borrowing is the only way the U.S. Treasury functions because they run a deficit, huge deficits every year. Now, on to silver. There's no way that they could ever let silver run. If silver were to run to $100 tomorrow, you could bet that gold is going to follow right off the bat. And actually, if you look at past bull markets and bear markets in the metals, silver always outperforms to the upside and it always outperforms to the downside. And what happens is when we're in a trend, either up or down, and I'm not talking about a week or 2 week trend, I'm talking about a 6 month, year, 2 year, 5 year trend, silver leads gold. So they cannot allow silver to come out of the box. If they do, then gold will perk its head up and start running, and that calls into question fiat currency. The other thing on silver is because it is such a small market. I mean, total production is for the globe is less than $20 billion, and I mean, $20 billion today is it's chump change. I never thought I'd say that. I remember when I first started in a business, the biggest deal ever done was $13 billion in 1985 or 86, and here we're talking about trillions at a time. But silver is so small, producing less than $20 billion per year, that a cash call or a physical call is pretty much guaranteed for a big player or big players to step up and say, okay, I own these contracts, I want the metal. And the problem is there's been so many contracts sold short versus what is vaulted and available for delivery. That's what's going to blow the system up. Silver is the fuse.
If you, Bill, I know, obviously, I know that this is, one could look at this question many, many times in different ways. But right now, assuming that the average person is looking at both gold and silver and they're weighted, say if they were weighted evenly, would you suggest silver might be a better political move than gold, or what would you suggest people look at?
I'm not sure what you mean by political move.
Oh, in the sense that gold maybe could be confiscated, but silver could never be confiscated.
Okay, I would not say silver could never be confiscated because silver has so many different uses. Governments could come out and say for national security interests because we've got to make bombs and missiles and blah 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 that use silver. We're calling in silver. There's really not enough at current prices. There's not enough silver outstanding to make a difference. And you're right. I mean, there's what, $7, $8 trillion of gold at today's prices that have been mined since the beginning of time. So yeah, that's still small in relation to the whole system, but it is something. As far as a weighting is concerned, the current ratio is what, 84 to 1, something like that. And it comes out of the ground, call it round numbers, 10 to 1. So God's ratio is 10 to 1. Man's ratio is 84 to 1. One of them has to be wrong. One of them has to be right. And I can tell you which is which. When the shenanigans of derivatives, futures products, paper products, etc., when those are all gone and we're back to a if you want to call it a cash and carry economy, financial system, etc., I would guess that the silver to gold ratio will probably fall back to the 20 or 30 level, maybe lower. A lot of people don't realize that for literally hundreds upon hundreds of years, it was 16 to 1, even though it came out of the ground at 10 to 1. And the reason being, go back 300 years, 400, 500, 1,000 years, in order to transport money, you had to do it on a mule or a horse or what have you, which meant you had to carry 10 times more weight in silver than in gold to get the same capital to its destination. So because of the weight, silver was discounted to 16 to 1. That's the reason for the 16 to 1 difference from the 10 to 1. As far as the weighting, 50-50 or what have you, I advise people, and obviously they do what they want to do, but my advice is be at least 70-30 to silver, with an eye in the future of becoming 70-30 gold to silver. In other words, when the ratio drops from the current 83-84 down to between 50 and 60, you might want to take a quarter of your silver and turn it into gold. If it gets down to 40, you do another quarter, so that you get to 70-30 gold to silver, but you're going to end up with more gold ounces than if you did it today, because you're using the strength in silver to purchase more ounces of gold than you would with that capital today.
That is so interesting, Bill, because I never thought of it that way, nor did I realize that 16 to 1 ratio it makes sense. There was me thinking that it was the ratio of gold to silver coming out of the ground, but I mean, no, that makes 1,000%, that makes sense. I think also, and I don't want to call, I know you're on satellite here and you've been very generous with your time. I just going to ask you, Bill, now looking at the EFPs right now in silver, and I'm looking at silver in particular because silver is really, really interesting. As you say, it's the fuse. So maybe let's focus on that. But I mean, the last week when silver was being driven down, I mean, between 22, 21, I noticed that the usual contango where you got, to keep the game going, usually in the futures market, you have 17, 20%, 20 cent, maybe premium in the futures position versus spot. It reversed to a 10-cent technical backwardation in silver, so that spot was essentially 10 cents higher priced than to be honest, I don't recall that happening since March 2020, when we saw the big noticeable gold EFP blow up, where we saw liquidity providers in London suddenly, basically suddenly being turned on because of a physical shortage to deliver their over-the-counter contracts, and they're hedged on the spot market in the US, and suddenly their spread runs $80 to $100 for them to race to bail themselves out from not being able to deliver physical. So interesting to get your thoughts on silver.
Yeah, you basically described backwardation, and it's probably worth explaining that. What that means is the spot price today is higher than next month's future, or 2 months out, 3 months out. The reason being, in the most severe form, is people are saying, I want my silver, I want my gold, and I want it now. I want it delivered now, because I don't trust that I'm going to be able to get it delivered in a month, in 2 months, in 3 months. That's what backwardation is all about. It's a lack of trust, and it shows extreme tightness in the market. As far as the EFPs go, the one who tracks that more than anyone else, I believe, is Harvey Organ. Over a 12-month period of time, I think for 2021, what was the number? That I think it was 8,000 tons of gold were EFP'd to London in a year's time. Well, that's ridiculous because total global production without China and Russia is under 3,000 tons. So 8,000 tons, I mean, that's 2+ years of global production. And there's no way to track it. Once it gets to London, there's no way to track whether that metal was really delivered. And I'm going to say, from my point of view, the numbers, they don't add up, they don't make sense, and it's impossible that there was an extra 8,000 tons of gold laying around to deliver on contracts that couldn't be delivered on COMEX.